Hello, everyone. Welcome and appreciate you all joining today. I'm Nathan George with GDS Link, and today we're going to be talking about all things cash flow data. As always, the focus is going to be on practical application as much as possible. We want this to be useful for everyone. So as a quick note, it is a live interactive session. So if you have questions, drop them into the chat and Kimberly or I will take them as we can. We'll also have some time at the end for a couple of questions, and this is being recorded, so you'll have access to a copy afterwards. Joining me today is Kimberly Gartner. She's the head of the VP and head of partnerships, customer success, and enterprise FI sales at Prism Data. Kimberly, you wear a lot of hats. Why don't you tell us a little bit about your background in the space, and then maybe start off with a couple of the biggest changes you've seen since you began working with bank data.
Excellent. Thanks, Nathan. It's really great to be here with you after all these years of us talking about this opportunity. So I got started my career at Sears Credit back in the mid-90s doing home improvement lending. And so it's fun to see the ways that purchase point financing has evolved as we think about the industry over the last several decades. I started thinking about cash flow underwriting and data outside a credit bureau over 20 years ago when I was with the Financial Health Network. We were running a roundtables of companies to be able to help them think about ways we can look at underbanked, underserved consumers to be able to help serve them profitably and well, and knew there was data outside the credit bureau that could be predictive and useful for credit risk. And so when I met Prism Data, met Jason Rosen, the founder, and had the chance to get to know the solution a little better, it was a no-brainer to come to the company having that automated cash flow underwriting now, really, I would say the oldest, most mature solution that's out there. So it's a little bit about how I've been touching this field for the last 20 plus years.
Well, interesting. So I'm going to completely go off script now. We were talking
as
I
expected.
You mentioned the original intent being trying to help serve those who, maybe didn't have credit, were underserved, new to credit, things like that. What are some of the changes you've seen? Like, what's the biggest change you've seen since those early days, 20 years ago?
Yeah.
That's forever in technology world, but what are some of the biggest changes you've seen in purpose, for example, for cash flow data?
For sure. Yeah, I think that's really where my passion started. We see today is, I would say in the last 6 months even, we've entered a new phase in cash flow underwriting. Adoption is really accelerating. Usage is scaling. I mean, if we could show you all the data about the true, acceleration of the number of customers, the API usage, all those things that Prism is seeing, we're moving from this field. And when I started 20 years ago, right, this was this idea or a vision, but now we're at a place where that data is accessible in many, things in many ways to open banking and the advancements of this infrastructure there. So we're able to access that data. And we have the automated infrastructure with Prism and other competitors out there who are able to ingest that raw bank account transaction data and make meaning of it for lending use cases. So the technology and the predictiveness has really accelerated over the last several years. We've moved from that education to that implementation. And to your point, this isn't just about underbanked, underserved consumers. I mean, although there's certainly a lot of opportunities in thin file subprime credit rebuilding use cases, we really see though across that credit spectrum, whether it's primes customers, super prime customers, subprime customers, Prism Analytics, cash flow data analytics is able to really separate that risk, rank order risk, and be useful for underwriting at a variety of stages in the credit life cycle.
Yeah, that's interesting. I mean, we're going to talk about use cases a little bit later, and we really want to get to that because that's the whole reason for using bank data is what those insights can drive, what value that can drive for you. But it's interesting to me to see, as you read the headlines of how the credit risk, the ability to judge credit risk at a lending decision, seems to be having some challenges with the way people are accessing credit today. Like the patterns changing with Gen Z, for example. You've got a much more emphasis on subscription models and BNPL and things like that, which aren't always accounted for in the traditional credit history. So certainly lots of interesting things. Before we get there, though, I do want to do a little bit of education for the audience, because I know some people may not be completely familiar with kind of the landscape. So maybe if you could sketch out, the key players or the key roles in that value chain of getting and using bank data. Could you kind of walk us through that?
Sure. So if you're thinking about the value of cash flow underwriting, you need that bank transaction data to be able to do that. So that's the foundational data input. And Prism is a bring your own data shop. So we can take data from a bank's on us data. We can take bank data from any aggregator, take data from bank statement uploads. So to the thing about the role starts with the customer permissioning that bank data in some way. So banks and credit unions really have that permissioning built already into their customer documents, right? So they're able to share that data with their own customers to be able to get the analytics. Otherwise, you need to go maybe as part of an automated application flow, right? The next step of your application process is to link your primary bank account, the one where you get your income. And so from there, you're probably using an aggregator like Quilt, Plaid, MX, Finicity to be able to go out to that open banking. They fetch the data from the financial institution and share that data with the institution or with the data provider or the analytics provider like Prism to be able to return insights, attribute scores off of that data. So those are two parts of it, right? So then you have that, and then you might be interfacing with a decision engine or some kind of LOS infrastructure. And so when you think about the decision engines, you have the really powerful and flexible solution to be able to ingest that data, put that together with other aspects in your credit policy, the credit bureau data, maybe other alternative data, and you're making a decision that's help you make a decision about whether you're going to say yes or no to that customer. But then you also have all the other decisions to make, right? If it's what's the line assignment? If it's already a customer of yours, maybe you're getting that, you're looking monthly at their bank account data and determining other things like cross sells or collection strategy, account management. Really throughout that customer life cycle, we can see the value of cash flow data and the roles of decision engines, GDS Link and others certainly are that powerful, flexible solution that helps enable that.
Got it. So for our AI overlord summary, it sounds like there's kind of three components. You've got the data driving the insights themselves, and then kind of the execution of those insights within your decision flow, whether that's origination or account management, which I definitely want to talk about the use of bank data there. But those are kind of the three key elements. I know one of the challenges that we've seen with our clients, since we're providing that action end of things, being able to execute with bank data insights inside your workflow. One of the challenges we see is consistency across insights when you're using multiple data sources or multiple data insight providers. Could you maybe talk a little bit about, and I mean, this is frankly the reason that we first started talking to you almost 2 years ago. Maybe you could help talk a little bit about how Prism Data kind of helps bridge that gap and why that's important.
Sure. So I mentioned Prism Data is a cash flow underwriting analytics provider. We're a bring your own data shop. So we'll take data from any source. That's bank account data that a bank or credit union has on its own members or customers. It's data you get from open banking through some of these aggregators. It could be bank statement uploads. We look at that raw transaction data, all of that really rich information that's still complex and very messy. And so what we do, and we've actually spent over a decade enhancing and perfecting this methodology, is we categorize this data, particularly for a lending use case. And, I think one of the things we often hear about is, well, why can't we just do this ourselves? The ability to categorize that information, standardize it, look at across a whole bunch of different banks, data sources, those types of things is really an important aspect of that. So our categorization is incredibly effective, incredibly fast. From there, we generate insights. This could be trended attributes, thinking about the similarities to attributes you get off of the credit bureau data. And we have over 50,000 attributes. So what we do is we work with customers to figure out which package of those, whether it's tens or hundreds of thousands of insights that are most useful for their particular lending use case and most predictive. We also have 3 scores that we use. So the insights go in to have 3 different scores that really provide that snapshot. It's a score of 1 to 999. Rank orders risk of default, and that data can quickly help you understand, how you want to make some of those lending decisions. One of the scores is our traditional credit risk scores, so likelihood of being 90 days past due in the first 12 months on book. We also have a first-party fraud score. So if you're thinking about shorter-term credit risk, likelihood of first payment defaults, never pays, those kinds of things. This can also really pick up those prime customers who maybe their credit score is great, but they have some kind of issue in their financial lives that you might not have visibility into. And then we have a score, so that first party fraud score, first detect, cash score first detect is a shorter term target, likelihood of being 30 days past due in the first 90 days on book. And then we have cash score extend, which is really a subprime score or helps in that earned wage access or other types of products like that. And that's also a shorter term target of 30 and 3.
That's helpful. So I want to draw one conclusion from what you said and make sure I understood correctly. And then we can kind of jump into some of those use cases you mentioned.
Sure.
So for example, if you allow your applicants for a line of credit to submit bank transactions or pay stubs or whatever via some OCR engine, like an Ocrolus or something like that, and then let's say you're going to Plaid and you're using their service to get the consent and the credentials to get in and get the bank statement data. That categorization and asset classification piece that you guys do is really core. That's the same across those different ways of ingesting that data. Otherwise, the scores you spit out on the other end are it's apples and oranges at that point.
Yeah, that categorization is really important. And so we don't use, sometimes other companies have enrichment on top of that raw data. We don't use any of that. We look at the raw bank transaction data and we have our insights and scores from there. And so to be able to think consistently, both about the consistency of the data, you have a standard score, a Prism cash score across all the applicants, regardless of how you get it. That can be really important from a credit policy or compliance perspective. We also know, I think, Nathan, we know that some of our joint customers have maybe 60% of the people are uploading are using open banking, and maybe 40% are uploading bank statements. And so to be able to have that consistency and confidence that those scores and insights that you're getting, regardless of the source of data, regardless of how it's provided, is clear and consistent.
Yeah, go ahead.
Well, and predictive, right? So
Yeah.
You want to know it's really predictive for those use cases, and we know our solutions are very powerful.
Yeah, I was going to say, one of the common issues we've seen, and it is an edge case, but it's an edge case. There's enough in the long tail that you still want to chase it. Is certain classes of clients, certain client demographics or client profiles bank in different places. They have different banking behaviors. So for example, we've got some clients who, the targets they're chasing, the loan products they're selling are more rural areas. They're not banking with big banks. They're banking with local community banks and credit unions and things. Well, coverage is not the same across the bank aggregators. So you may want to go to like an MX for that long tail or a Finicity, MasterCard for that long tail. So having that consistency across has been again, one of the reasons we partnered with you guys is very helpful, because then every time our clients go in to make a change to their credit strategy or how they're making that credit decision, they're not having to rebuild their model every time, right? They have a consistent cash flow insight to work with.
That's right. And I think, Nathan, one of the things that raises for me is, how do people get to market and start using this? And that consistency, but also that generic score can be really important. And so oftentimes we're spending a lot of time with the compliance, model governance, credit policy, fair lending folks at sponsor banks or the FIs directly to be able to, one, demonstrate that we are, hitting all the boxes from a, compliance, legal, regulatory perspective. So that's one of Prism's strengths, I'd say. And then we're also really effective at helping companies know how to apply it. So we can work with your credit risk team and say, okay, here's what you're looking at. Here's what you're targeting from, approvals perspectives, losses perspectives. We recommend that you start with a Prism cash score cutoff of 500. The scales are different than you might see with FICO or Vantage, and that's just making up a number, right? The number is going to be dependent upon your credit strategy. And so, we can say, let's come in and at the credit score of 500 or the cash score of 500. We can look with you over time to see how that's going, help you tune where you're going to be making that cutoff. Do you need to raise it? Do you need to lower it based on everything you're looking at? And when you are sharing back your performance data with us, did you book this loan? What happened to them? What did that look like? We also have the data to help you identify those most predictive insights. And so oftentimes companies like to start with that cash score, that generic insight, and build up over time their own proprietary solution where they're pulling in a certain number of attributes, pulling in Prism's cash score, and they're using that in conjunction with credit bureau data or other alternative data, that they might be looking at.
That's a good question. When I first started looking at, the use of cash flow data in lending in particular, almost every use case that I saw was as a second look, right? Like there's not enough to say yes in the credit file. So let's go look at their kind of more of an affordability and look at their bank transactions. Questions we get often is, what other use cases are there for bank data? How else can we use it? And is this in replacement of or additive to credit history data? Could you maybe speak to that a little bit? Like what are some of the key uses of bank data beyond just that second look case, which seems to be really common?
Right. The second use look case is absolutely very common. And it's often where large enterprise customers, credit card customers, personal loan lenders might start, right? You're starting and thinking about how can I say yes to more customers? How can I increase approvals and start moving them through a second look flow that looks pretty seamless to the customers? So just if people aren't familiar with second look, oftentimes what might happen in an online flow is I'm online, I'm applying for some kind of credit, and behind the scenes, there's something where I'm automatically approving some customers, I'm automatically declining some, but then you have these other customers that you want some additional data for. And so through that online application flow, you'd say, link your prime as the next step of your application process, link your bank account, the primary one where you get your income. And essentially in real time, as fast as possible, you're going out to the aggregator, getting that data. Once Prism has that data, we are a real-time analytics layer. We're providing that data back to you practically in real time, and you can move on and say, yes, you're approved, right? So, one, that's the second look flow. Someone who you might have said no to, you're able to say yes pretty quickly. There's other scenarios where you're thinking about line assignments. So maybe someone's going through the flow and you're approving them. Yes, congratulations, you're approved for a $500 line of credit. For an opportunity to increase your line, link your primary bank account, the one where you get your income. We see those use cases in telecom, credit cards, personal loans. I mean, all different kinds of aspects when you're thinking about, what is that line assignment? Or what am I purchasing and how much do I need down? You think about, home, like, windows and roofs and solar and phones, all those different types of things. It can help with that. We have a number of customers. I talked a little bit about earned wage access, talked about rental screening to be able to identify the riskiness of a renter. And then you think about all the different use cases. I mean, those are just a snapshot of some of the companies that we're talking about. We talked a little bit about account management throughout the credits, throughout that credit life cycle. And then increasingly, there's applications in SMB, small business, and commercial applications as well.
Let's dig in a little bit on that line assignment. So if I'm understanding you correctly, the credit decision's already been made. They've been auto approved. And now you're saying how much, it sounds like you're saying more than just, how much credit am I going to give them? Maybe there's other terms of the loan that you changing as well. Do you have any examples? I mean, to me, it's like, hey, for exchanging your bank transaction data with us, we're going to
Right.
give you XYZ benefit, right? So could be more credit. What are some of the other examples you've seen in addition to line assignment with some of your clients?
Yeah, I think what I was alluding to earlier is if you think about, maybe I'm going in with my, me and my three kids are going in to get new phones, and I'm walking into a store to purchase devices. And so, I don't know, that could be $4,000 right there, right? And some new
Right.
phones. And maybe my credit risk show, maybe they run the first standard approach and say, okay, you need to put $1,000 down, and we can finance $3,000 of these phones. Like, well, if you link my bank account, maybe it shows I'm lower risk. Maybe I only have to put $100 down and I can leave with the four phones and the financing. And so, you think about in some of those situations, you're always wanting to say yes to the customer to some amount, right? But it's how much do I have to put down, $100 or $4,000 to walk out of the store with those devices?
I'm smiling because your use case reminds me, it's like when you're in the store at the cell phone store, while you're there for the 2 hours trying to get everything, I can just see your kid going, I want the new Apple Watch that's got the cell modem in it and everything. Yeah, definitely nice to have more credit for that. So it seems like there's promotional opportunities with that as well. One of the things we've seen and I would like to get your comments on this. We've seen clients ask about is, okay, I've got consent to share bank data. And there's some variation on that, but I think I've seen up to a year, although it's changing and rules state to state may differ. But account management's been another really key area, especially like when you mentioned, propensity to default in the first 30 days or first 90 days, some of
Right.
your scores around that. We've had quite a few clients say, can I use this for account management purposes? Maybe I need to readjust loan terms because it seems like they might miss their payment and I want to get ahead of that. Or
Sure.
can you give me some ideas of how you've seen account management functions
Right.
work with bank data?
I think it's all the different things you're talking about, right? So we see some types of risk indicator. Maybe their cash score goes down, or maybe there's certain attributes we're keeping an eye on and we're seeing some changes there that signals risk. So then you can get ahead of that from, an account management perspective. To your point, maybe you're changing some of the terms or the available credit. Maybe you're employing some kind of automated credit strategy, or, a collection strategy. You think about all these folks here, who am I going to reach out to if someone's maybe approaching a payment, but I see the score went down. Okay, well, maybe I want to, reach out to them somehow. Or if I'm in a collections use case, gosh, I only want to spend my time and energy in the right way. And so this person has cash in their account, this person doesn't, right? We see these other aspects. There's other signals that you can use at those different stages. But yeah, I think we're going to see, I'm probably scratching the tip of the, iceberg, I guess. Is that the right? I don't know. Just
Yeah.
scratching the tip here of the different ways that we're seeing cash flow analytics being used across the credit spectrum.
It certainly seems, with respect to use of this data with credit history data, it certainly seems that it more and more, at least in the press, I'm reading about people combining the credit history and the bank data.
Absolutely.
Again, for the reasons already mentioned and a few others, that you need that added insight because that extra little bit of lift that you get from combining those two things is what allows you to be more competitive or offer more competitive products in terms. It seems like there's some innovation going on around products that can be offered. Could you maybe talk in the last few minutes that we have, what are some of the coolest things that you see on the radar for the next year, or for the rest of 2026?
Yeah.
And how bank data is being used, or some innovation that you're seeing in the space, CFPB and 1033 and all that other fun stuff aside.
Yeah, there's so many different ways I could go with this. So I think, like I said before, the application, the usage, the adoption, acceleration of cash flow underwriting analytics has changed dramatically. And so when we think about all the different companies and use cases that are using it today, I think we're just going to continue to see that trend accelerate. So if companies aren't using it today, I think they're going to be making an evaluation decision by the end of this year, and we're going to really hit that FOMO next year, right? So I think hopefully we're going to be seeing more of that long tail of banks and community banks and other lenders who maybe are on the sidelines really saying this is table stakes. We need to move forward. So I think that's just, the continued scale and adoption of cash flow analytics, I think is part of what's on the horizon. And we're just going to see that continue. From Prism, we're on version 4.1 of our existing solutions, of our scores and our insights. And in this last release, we had discovered that our cash scores are more powerful than FICO. And it was one of the first times that we've seen this kind of increase in predictiveness to that degree. The orthogonality of the data is still there, that Wayser additive is still there. But I think we did about 100 back tests last year where companies are sharing their data with us and looking at it. And very consistently, we are outperforming everyone else in the market, and companies are just blown away by what it means. So I think part of what we're going to see is that continued predictiveness increase. So Prism is certainly investing there to make sure we maintain that strategic advantage we have in the power and predictiveness. We release a new score, we release new versions about every 12 to 18 months because the economic environment is changing. And then, I think additional things like deeper specialty scores around, earned wage access, around auto. We're seeing a lot of acceleration in the auto space. So other industries that, we didn't touch on today, we're seeing a lot of adoption there. I think we're going to continue to see acceleration and advancements as it relates to small business. Like I said before, a lot of acceleration in the mainstream financial institutions, as well as some of the fintechs and online lenders that we've seen as some of the early adopters.
Yeah, side question, and I didn't prep you for this, so apologies to put you on the spot. But with how do the insights that you guys have work in the small business world? Is it primarily being used with like the key business owners at this point, or is it actually a score specifically built for the business entity? Maybe talk about, if you could speak a little bit to that.
Yeah, so today what a lot of companies are doing in the small business space are using Prism's core cash score solutions and applying them to small business. So we've done a lot of work, and in a minute, I'm not going to be able to dive into it, but to validate the efficacy of our solution in the small business space, as well as the insights that are most predictive. But as you touched on, I think this is an area where we'll see more from Prism and some of our partners to come. But many of these lenders are lending both to consumers and small businesses, and they want the consistency of that data across those. Particularly if you think about that line between, a business owner and their personal credit, particularly at the smaller end of that small business. There's a lot of predictiveness there, and then we can continue to enhance our solutions to provide even more value to more and more SMB and commercial lenders.
Yeah, now that makes me think I want to have more conversation offline about the small business space. I've got new ideas, but
yeah,
this has been really, really great. We're going to wrap it up now. Just for everyone, kind of close in on some of the key messages. One of the best ways I heard it summarized, I think it was the FinTech Weekly guys that did it. They talked about, credit risk being the willingness to pay, a measure of the willingness to pay, and cash flow data being the ability to pay, and that you really don't have a complete picture without both of them together. I thought that was well structured way of putting it. I think from what I'm hearing from you, Kimberly, and what we've seen, another key advantage or a key thing as you plan to use this type of data in your business is the flexibility to get consistent insights across all the data sources that you're going to need to have in order to fully execute and get the most out of bank insights. So anyway, with that, we will close it for today. Thanks again, everybody. Kimberly, thank you for being willing to come on and talk to us a little bit about what you guys do and your insights here. As I mentioned, if you have any questions or if you'd like a deeper conversation with Kimberly or with me, I'm more than happy to do that. Don't hesitate to reach out. The video will be recorded and contact information will be available online for everyone. You should be getting an email. So send the questions our way. Anyway, thanks again, everyone, and I hope you all have a great week.